It's Tuesday, April 10th, 2012. I'm Curtis Hollister, and you're watching The Quarter on Investor Candy TV. Today, we're going to be talking about Greenbrier, trading under the symbol GBX on the New York Stock Exchange, and the fact that they've come out with amazing results in their last quarter, but their stock is dropping. Here to talk to me today about the company is Dana Blankenhorn, a top contributor on Seeking Alpha. Dana, welcome to the show.
Doing good. How you doing?
Doing great. Thanks so much for joining us again. So, GBX, Greenbrier, these guys are in the business of manufacturing kind of the equipment to transport things on either rail or over water within the kind of the European waterways, etc. So they're kind of a supplier to the transportation companies.
Right. The main company is based in Lake Oswego, Oregon, which is near Portland. They have a big factory in Portland. They also have a marine operation, which basically makes these big barges you see that float rail cars. And they have a factory in Poland with an operation in Germany. So they do have exposure to both Europe and China. And right now, what people don't want to see is exposure to Europe and China.
Now, although that's the case, within any industry, these guys have come out with some monster numbers in their last quarter. Yeah, you're citing your article here that they're up 60% over last year's results at the same time, with pretty significant jump in revenue to excess of $400 million. Their order book is up, and they beat the street by 10 cents a share. Usually you get at least a pat in the back for that, not a stock that's dropping by about 15-20% since they announced the news.
Sometimes the market wants what it wants, and it's got nothing. Sometimes it's not about you. In this case, it's more about the sector, and to a lesser extent about the global economy. Look, if Europe collapses, if Europe crashes, their results are going to be severely impacted. That no question. And when you invest, you're not buying what they did last quarter. You're buying what you think they're going to do next quarter and the quarter after.
Yeah, exactly. Another thing, obviously, that they, no company, stock is made for selling. However, the rule is nobody likes the executives or the insiders selling. So Timothy Stuckey sold 1,050 shares. $20,000 for the stock.
Got a kid in college.
Does he just have to make the last payment on a boat? That seems like kind of table stakes for what? Yeah. I don't know. It just seems like bad press for no reason.
Yeah, maybe he had to pay his taxes. Who knows why he sold? It's personal to him. He didn't sell a whole lot, but it shows up on the report. The market's looking for an excuse. So, but the good thing is that now you can, if you want, you can buy this stock at a much more attractive price.
Yeah, I think they're down sub $17 now.
Yep.
It's one of those stocks. Obviously, these guys are showing some momentum. Obviously, they're doing well. Like you said, their order book is up. Was that was that ringtone Cagney and Lacey?
No, that's a song my son plays on the piano.
Everyone's ringtone is a telling story. So back to GBX. So these guys have had a little bit of bad press. Timothy Stuckey, obviously, he doesn't deserve to. He's probably getting trounced on by a bunch of guys internally, but if they didn't know about it in advance, he probably doesn't deserve that for only selling 1,000 shares. But what does the future hold for these guys? Obviously, Europe and China have slowed down, and they're going to continue to slow until there's really a reworking of the system and a purge of kind of some of this debt, and there's like new blood coming in. Is this a 5-year wait for these guys to start creating new value? 2-year wait? What's the wait cycle?
I don't think it's that long. Frankly, I do think that Europe is going to get its act together. I think they're going to do it through increased liquidity, basically printing more money. Sharing the pain a little bit, and getting a growth strategy in order. That's what we did.
Yeah.
We had a very similar problem in 2008. We printed a lot of money. We threw a lot of money at the problem. We didn't expect the magic austerity fairies to save us, and it didn't. The European leaders are doing what American conservatives wanted us to do, which is they're cutting and cutting and cutting.
Yeah.
And when you spend less money, guess what? you spend less money. There's less money being spent.
And there's riots in the streets, obviously, as a result.
Yeah,
So,
as a result, because it's real people being impacted. Your personal balance sheet is not the same thing as a business's balance sheet. We were talking about yellow freight before, and cutting is not getting rid of their debt.
yeah.
Their debt is actually going up, and it's also true for nations.
So,
Cutting like that doesn't do the job.
So it doesn't matter how good this management team is. It doesn't matter how few or how many shares Timothy Stuckey sells. I mean, these guys are a victim of the environment that they're in, obviously. And I mean, right. and they do deserve some credit, obviously, for those kind of results. Those are monster numbers that they've increased in a time when it's not easy to do that.
That provides opportunity for investors to get into good companies at attractive prices. Mm-hmm. You don't want to buy a company when everything's going great. When everything's going great, everybody's saying buy, buy, buy. That's when you sell.
Yeah, exactly.
When everybody's saying sell, sell, sell.
The minute your barber's talking to you about the stock market, I mean, it's probably a good time to exit it. So these guys are at $6.99 now. What's the entry point? Do you think they're going to go sub 16 or sub 15?
I think they may be close to the bottom, somewhere between 16 and 15. If you've got a 2-3 year time horizon, that price is a pretty good price.
Yeah.
You're talking now about sub 20 or sub 15 on the PE ratio at current prices. That's a decent price with the market trading at 15x earnings, which is actually a little bit high. It should be trading at something like 12. They're at 14. If you can get in at 13, hey, you're great.
And Jefferies has these guys as a price target of $20. So any entry point with a 16 as the first number probably is a good entry point.
Yeah.
Awesome. Dana, thanks so much for your time once again, and great analysis on a company that probably deserves a little more love and a little more attention than they definitely got in the last results.
Sounds good. Thanks.
Okay. If you'd like more information on Dana Blankenhorn, you can visit his blog on Seeking Alpha. If you'd like more videos from public issuers or industry experts, you can visit investorchannel.tv. I'm Curtis Hollister. Thanks so much for watching The Quarter.